Have you ever stopped and wondered what's really going on with your loans behind the scenes? Well, today we're digging into a fascinating theory from our source material. It's all about a common tax form, the 1099 INT, and a hidden story it might be telling about your debt.
So here's the big provocative question at the heart of this whole thing. What if the interest that banks are charging you has already been paid by somebody else? And what if the proof is hiding on an IRS document that you've probably never even seen? It's a wild idea. Let's get into it.
Okay, now before we go any further, just a quick but really important heads up. What we're doing here is explaining a theory we found in our source material. This is purely for educational purposes, you know? We're absolutely not giving out any financial or legal advice, just breaking down the information as it was presented.
All right, so to really wrap our heads around this theory, we first have to be on the same page about what this form is supposed to be. Let's just quickly cover the official by-the-book story. So, according to the IRS, this is pretty simple. If a bank or, some other financial place pays you more than $10 in interest, like from your savings account, they shoot you and the IRS this form. It's all about reporting interest income, money you've earned. Simple enough, right?
But this is where the source material takes a huge turn. It puts forward a completely different way of looking at this form. Not as income you earned, but as proof of a transaction you had no idea was even happening. The theory really kicks off with this question. I mean, we all know that when you have a loan, you're the one paying interest to the bank, right? But what if the bank is also getting interest payments on your account from a totally different source? Okay, so this slide here, it lays out the whole process according to the source. The idea is, when you sign for a loan, that promissory note you signed is treated like a valuable asset. Then, the bank supposedly bundles it up with others and sells it to investors. That's securitization. And here's the kicker. The source claims the bank then gets interest payments from those third parties, and that's the income they report to the IRS on a 1099 INT.
And this, of course, leads us right to the most explosive claim in this whole theory, this idea that banks are basically double-dipping, getting paid twice for the exact same interest.
Here is a direct quote from the source that it gets right to the point. The whole argument is that the bank makes money from selling your note, and then they turn around and make more money by charging you for the very same interest they've supposedly already been paid for.
And this slide just brilliantly illustrates that central conflict. So on one side, you have this supposed hidden transaction where investors pay the interest, and it gets documented on a 1099 INT. But on the other side, you have the reality we all know, that monthly bill that shows up demanding you pay that principal and interest.
Okay, let's use some real numbers to make this clear. Let's just say over a year, you look at your statements and you've paid a total of $3,000 in interest on your loan.
But then, and here's the twist in the theory, if you could somehow track down the 1099 INT the bank filed for that same account, it might show something crazy, like $15,000 in interest income. That's a massive difference.
And that leads to the million-dollar question, right? If you only paid $3,000, but the bank told the IRS it made $15,000 in income from that account, where in the world did that extra $12,000 come from? The source claims that discrepancy, that's the proof of the money from third-party investors.
So, if these alleged forms actually exist, how would a person even find them? Well, the source material actually suggests a specific method for anyone who wants to try and investigate this themselves. The path they suggest is filing an IRS Form 4506T. That's basically a request for a transcript of your own tax records. The whole idea is to get a complete list of every single form filed under your Social Security number. The source suggests you might find 1099 INT forms filed in your name that you were never ever sent. And that, they say, could be the first step in questioning the entire debt.
So let's just boil this all down. The core ideas are, your signature creates a valuable asset for the bank. Then, supposedly, both the principal and the interest get paid by other people. The 1099 INT is supposed to be the paper trail, the proof. Now, importantly, the source isn't saying this automatically cancels your loan, but they argue it gives you a powerful legal reason to challenge it, since you're being asked to pay a debt that's already been settled.
And this whole tangled web brings us to one final, really powerful question that gets the absolute core of this whole debate.
So what is it? Is Form 1099 INT just a regular, boring tax form for reporting income, exactly like we've always been told? Or, as this theory suggests, could it be something much more? A key piece of a hidden puzzle that shows your debt was settled behind your back? You know, the answer to that really depends on which story you choose to believe.